Sure. So for the hurdle rate, if you're looking to invest, it's kind of like, what is the opportunity cost? What is the safer thing you could invest in? And what is the gap you're getting on a riskier investment? So in the current economic environment for decades now.
Hey everyone, and welcome back to Finance Wolf. In this video, Lyn Alden talks about Bitcoin and other cryptocurrencies. Interest rates that are too high in debts, the story of fiscal dominance. Investors have been happily surprised by how strong gold has been. It looks like gold, which is usually seen as a safe investment when the economy is unstable, is a sign of bigger problems with money. Lyn points out that unusual bond behavior has been seen during economic downturns. Instead of price increases, yields have been seen to rise. High levels of government debt and persistent inflation may have caused the market to react in this way. As a result, standard investment strategies like buying bonds when PMIs drop are not as reliable. If you want to know how these economic tools and trends might affect the investments you make, be sure to join and click the like button for more expert advice. Let's talk more about these issues while Lyn continues to look at the dynamics at work.
For example, a 10-year government bond is kind of classically used as a hurdle rate. So if you can get, say, 4% when investing in a 10-year government bond of a developed market economy, that's your baseline. You wouldn't want to invest in something riskier with a lower expected return than that, because one is basically guaranteed by the government itself that can print its own money, so low default risk. And say, well, what would it take for me to invest in equities, right? So for example, you might say, I want an equity risk premium of at least 3%, meaning that if I can get 4% on government bonds, I only want to invest in equities that have more risk if I can get 7% or better. But of course, the structural inflation and money supply growth we have in the system distorts that, because really, when you're looking at a 4% return, you're actually often still getting diluted from the network. So for example, in the current monetary system, over the past, call it 50 years, the average money supply growth rate per year in an advanced economy is generally ranged between, say, 6 and 9%. Annualized. And so people often think that their hurdle rate is, let's say, CPI, so you're trying to keep up with the flawed measures of price increases going up. Then they say, okay, well, the treasury bond is usually somewhere around that level, maybe a little bit higher, sometimes lower, and they're looking to beat that. But really, I think that the hurdle rate you want to beat in the current system is the money supply growth rate. And I kind of measure that in terms of dilution or not. Is your share of the network getting smaller over time, or is it getting bigger over time, or is it staying the same? So if you hold dollars or you hold pounds and you are not earning an interest rate or some sort of cash flow return on that is exceeding or at least keeping up with the increase over time of that money supply, then your share of that money is decreasing compared to the overall network. You're getting gradually diluted out of the system. I think that's the real hurdle rate. And when you look at, for example, you can apply that to other monetary systems as well. If you're looking at gold, for example, gold's average supply growth is estimated to be something like 1.5% per year. It kind of ranges between 1 and 2%. And so as you hold gold, you're very gradually getting diluted as a share of the network. And so if you're measuring your performance in gold, you want to have it such that over time your gold stack from this investment or from this decision to do something with your gold is earning you more gold than the dilution that happens through gold mining, for example. And of course, with Bitcoin, the terminal growth rate of the supply is 0. And so basically, as you look out your hurdle rate is just 0 dilution. And so any sort of business that's built on Bitcoin or that earns Bitcoin or that is adding some value should basically earn something that is, you end up with more Bitcoin in the future. So it actually makes calculations more simple in the long arc of time. Right now it's challenging, of course, because Bitcoin's earlier in its adoption cycle, it's volatile. Most companies, their expenses are going to be denominated in fiat currencies in many cases, so they're managing multiple currencies in terms of both their revenues and their expenses. So it's a different environment right now for Bitcoin companies. But basically, I think that's a framework to think about. No matter what monetary system you're in, you want to look at the growth rate of that money. I think that's a better metric than what we see now, which is trying to beat the 10-year government bond or trying to beat CPI. I think those are almost like false targets. You give people these false targets and they feel good that they beat that target. Like, look, you're earning higher interest on your government bond than CPI, so you're doing fine. That's kind of, it's almost like a false operation there. But I think that the key thing is to step back and always ask, are the activities that you're doing gonna result in you not getting diluted as part of the network, or are you gonna at least stay even? Are you gonna grow your share of the network? That, I think, is the true hurdle rate. Shauna, basically, I think it's slowly going up the stack. Basically, a big chunk of how finance works for the past several decades is you have a depreciating unit of account because the supply is going up, and if you're in a position where you can short it, meaning borrow it for a long period of time at a low interest rate, that has been, unfortunately, a very successful way to build wealth. It's kind of like playing blackjack with the economy. You want to have a lot of debt, but not so much debt that you blow up in a recession. And that's kind of how we've allocated resources. That's who's benefited most from the system. And I think during a transition, that unfortunately continues to be true for a period of time. So, for example, MicroStrategy, they use the fact that they have access to very cheap fiat capital markets, and they can issue, they can issue debt, they can issue convertible instruments, they can issue equity, and then they can use it to buy Bitcoin. It's kind of surprising we haven't really seen it on the sovereign level yet. They can print something that can endlessly increase in supply, and they can buy something with absolute scarcity. And so far, at least on the kind of the public stage, there's not really been much of that. I think once that kicks off, it gets interesting because, there's 200-ish countries in the world. Something like 160 of them have their own currency, and they can issue the currency to buy Bitcoin. And if you're first at doing that, you get disproportionate benefits from if you're the 100th country to start doing that. And now we're seeing it in the corporate sector. I do think the sovereign level's next. It probably starts with someone smaller. There's already, for example, there are countries mining Bitcoin now. There are countries holding it as a reserve asset, generally smaller countries, not a lot of them, usually a smaller share, but it is happening around the margins. I think it gets interesting when one of them just says, look, we're just going to create more of this thing that we can do infinitely and buy something scarce with it. And I think it's like most things in Bitcoin, that can be disruptive when that happens, but that's a phase it has to go through.
Since her first buy in 2020, Bitcoin has gone through a big surge equal to a tenfold increase. Even when the market is going down, the Bitcoin market has been growing and becoming more accepted. Even though it is naturally unstable, Lyn thinks Bitcoin is a revolutionary tool that makes transactions faster and more efficient. Depending on standard financial middlemen, Lyn is hopeful about the future and believes that Bitcoin has a lot of potential, especially as global liquidity changes. She advises investors to consider Bitcoin's long-term possibilities and stresses how important it is to have a diversified investment strategy. To get through future market cycles, Lyn's ideas serve as a reminder that the financial world is always changing, so it's important to stay aware and adaptable. If you like this video and want to see more like it, please subscribe to our channel Finance Wolf. See you in the next video.